Hello, Jim here. When selling options, one of the important things to do is to determine when you have a really good trade. Today, I want to talk about that. I want to share with you a couple of trades and then see if you can maybe help me come up with some really good guidelines to determine when you really have a good trade. You might ask why I want to do this. Well, I primarily want to find a way to kind of rank the trades. And then when you really see that you have a good trade, maybe you should put more contracts in or take more risk because it really is such a good trade. So stay tuned and let's jump right in. Okay, now what I've done is I've set up again another spreadsheet. I just took this from my planning worksheet for this week, and I've identified 6 trades for February that have been my best trades, or at least what I'm considering my best trades. And I'm quickly going to kind of go over them. I'm not going to go into detail. I've got 3 that are vertical put credit spreads and 3 that are cash secured puts. And you wouldn't necessarily compare these the same way, mainly because you need so much more capital for a cash secured put versus a vertical put credit spread. So the first trade is the one I did, I guess, yesterday, which is Path, UI Path. It's in my Fidelity IRA. It was a strike of 21 for the short strike and 16 for the long, and the expiration was 4/19/24. Does have an earnings date coming up, which I think it may be impacted a lot like Square and some of the others and Zoom and that have been, they've had good earnings in the past. They've always seemed to beat earnings, and then the stock has shot up. I'm thinking that may happen again. But I did 418 in premium. 1581 is the required capital or the max loss. And the yearly return is 189. And it's because it's a shorter DTE and such a small amount of capital is required. I did do 4 trades or 4 contracts, mainly because I did that calculation before. And that's what I'm trying to determine. When can we figure this out? When can we determine, wow, this is a great trade and I really need to kind of bet a little bit more on it? The next one was CVS. This is one that I did earlier in the month. These are all new trades. This was in my Roth Fidelity. It was a 72.50, 62.50. At the time, the current price of CVS was 76.24. So this is a value company. It doesn't change much. The expiration was 517 versus 419 for Path. And for it was required capital of 1674. Again, it's 2,000 minus the 325s, 28. And it had a 75% return, which again is, in my mind, really, really good. And then the last one is Apple, another vertical put credit spread, 165, 155. Again, May 17th, current price was 183. I believe Apple is below 180 now. It might be like 179 or 178. I brought in $191. So this one wasn't as profitable, compared to CVS, which is a little bit of a surprise. So those are the 3 that I have for the vertical put credit spreads. And typically they do have much higher yearly ROI compared to cash secured puts. So let's look at a couple of the cash secured puts. Zoom, as you guys know, I really like Zoom. I traded a lot. It was 61. This is one that I had a cash secured put at 70. Zoom dropped all the way down into the low. I believe it dropped down to, it was 60.80. Here's the current price, or the price at that time. Now I believe it's over 70. It may be as high as 71 or 72. And I was kind of double the bet. I was figuring Zoom would be assigned at 70. I'd have 100 shares, and I would maybe also have 100 shares assigned to me at 61. And then the cost basis of the 200 shares would be a lot less, maybe 65, 64 based, when you add the premium in. And then I could sell covered calls. Again, Zoom blew out its earnings and it shot up over the last couple of days. But I brought in 327. The amount of capital that was required is more, but it had a pretty good return because of 24 days. Again, I did this just a week or two ago with a very quick turnaround, and that had the biggest impact, which were the fewer days. So that's probably my third best trade. And then Polaris, this is the only role that I've included in there, mainly because I've done really well with Polaris. I still don't own any, and I've been trading it a lot over the last couple of years. This one also is expiring on 3/15. And this, I've collected nearly $1,200 on this trade. And this, I have other Polaris trades that are in other accounts. This, I believe, is in my Fidelity. Yeah, it's my Fidelity account. This trade, this roll, I made $3.99, and it includes both the premium I picked up for selling the new position and then buying to close the old position. Here's the required capital, which again is just the 9,000 minus the 399, and it's not even taking into consideration all the previous premium I had gotten. And this is a 14.7 return. It's DTE is much farther out, 115 days, but I just wanted to share that in the sense of how much cash this one position has been bringing in. I believe if I look at just the time frame I've been doing this trade, which I think started maybe, when did it start? Let's look here. Back in October, I probably have closer to a 20-25% return, but by far it's brought in a ton of cash. And then the last one is Surge Pay, which is the one I did earlier this week. And it was an inexpensive $7.50, and at the time it was $7.20. So this is one of the first trades I had done where it is in the money for a pretty inexpensive stock. But the fact that it's profitable, it met all my guidelines. I typically do not trade in stocks stocks that don't make money. So it met my guidelines, and I decided to go ahead and do a trade in it. And it doesn't require much capital, again, because I did two trades at 750, and then so it's 1,500, the 750 times 2 minus the 258 to come up with the 1241. And the expiration was also May 17th. And it brought in 94%. So, and that's with 81 DTE. So if I'd done a much shorter DTE, I probably could have had a higher return. And I'm perfectly fine with owning 200 shares at 750. Again, because my cost basis would be closer to 650. So this had a really good return. So after I did this trade, this is the whole reason for this video, I thought, well, maybe I should have done more than 2 contracts if this was so profitable. I probably should have done maybe 4, maybe 6, maybe 8. And kind of brought me down this path of trying to figure out how, other than just looking at ROI, what other things should I look at? I know DTE is also pretty important. So the shorter the DTE, the much higher the return. Of course, the exception is when you don't need a whole lot of required capital. You can also have a really good return. So I've come up with a few guidelines, and this is where I need everybody's help. If you would, leave a comment and let me know what you think. Here are the things that I'm looking at for ranking trades. So right off the bat, a higher return on investment by option strategy. Again, you can't really compare covered calls to vertical put credit spreads, or even vertical put credit spreads to cash secured puts, even though the returns were quite high. Also, I think we need something that assumes that the company is of good quality. And what is good quality? It means, again, all the stuff I've talked about. It's got good profitability. Does not have crazy earnings per share. It has little debt or no debt. It has all those specific criteria. And then also, it's not like it's not at the high point of its 52-week range. It's more like in the middle or the low end. And then also, is it outside the Bollinger Band? I can show you the best way I found to do this is if you go to Yahoo Finance, and then if you go to the Bollinger, or you go to charts. So I come up here and let's put path. We'll bring it up, and then down below, if you look at charts, and I already have it set up with the Bollinger Band. So the trade I did for them was right around, well, the cost basis is down here, but it's definitely below the Bollinger Band. And how do you add the Bollinger Band? You can just add the indicator. So you can select here, and here's Bollinger Bands, and by default it sets the two deviations and the upper and lower band and the middle band. And it's fairly easy to do. And I don't use this as much. I'm more of a fundamental, but it's a good way of looking or determining, are you at a good point of making a trade? Like if you're closer to the lower band, then I think, especially for selling puts, that's probably a good idea. And maybe for covered calls, you could look at the upper. Are you too close to the upper end of the band? Depending on how you set up your strikes, so if you're real close to the upper end of the band, well, then maybe it's not a good time to do a covered call, or you need to do a much higher covered call to be farther outside that band. I prefer to be outside the band completely, for puts for the lower band, like I did with Path. I did a 20. And what's nice is once you set this up the way you want it, you can have other indicators. You can also draw lines. You can do all sorts of things. And then when you switch, like we'll do surge, it again will, if you go back to chart, it'll keep track of what you've selected. It's probably the best place to go for doing charting. And here again, I did 750. It's a little bit confusing when you look at surge because it's so inexpensive at 750. But there again, it started making earnings, and you can see when it had earnings, you can see these huge spikes up. You can even see it more with Path, and I think that's going to happen again when both Path and Surge have the next earnings, since they're growing so quickly. So that's what I wanted to talk about with you guys. Again, please leave a comment. Let me know what you think we should do, what additional rankings we should use. And I'd like to come up with some kind of a system so that wow, this is an awesome trade and I really need to, put more contracts or, put more effort towards this trade compared to other trades. So thanks for joining me, and look forward to seeing you next time.